What's going on, Tits Gang? It's Jackie back for another video, and this time we're going to be doing a how-to video. Today's how-to will be discussing Fibonacci and Fibonacci retracements. So if you're unfamiliar with Fibonacci, the tool over here on the right-hand side, this one right here, okay? This tool basically lets traders identify horizontal levels of support and resistance, as well as it helps you identify the strength of retracements. Okay, so I'm a bit of a boomer, and this is all going to be shot in one take because I don't have any video editing software because I am a noob. So bear with me. Okay, so let's just start with the very basics. Okay, so when we're looking at Fibonacci, the retracement tool itself, okay, you always go from left to right. Okay, you never, ever go from right to left. Okay, every single time that you take the Fibonacci tool out and you use it, you're always going to go from left to right every single time. Okay, so let's put that as note number one. Always go from left to right. Okay, so that's tip number one for any Fibonacci tool retracements. Okay, so how do we identify how to draw these and where to draw them from? Okay, so I have pulled up a chart that I have never looked at before. Okay, and what we're going to do is we're going to do all the Fibonacci retracements on this chart that we can. So the first one, okay, is we can see that this stock started down here in July of 2001 and basically only ever went up. So there was no real ability to use Fibonacci retracement if you're looking at a weekly time frame for this move, okay? But when it started to fall over, okay, we could identify that this was the top, okay? And so if we know that this is the bottom down here and this is the top, we're going to pull out our Fibonacci retracement tool and we're going to start from the lowest low, okay, to the highest high, which is up here. Okay, so this is our highest high. We drew it from left to right, and I'm going to connect it right at the top. Okay, now let's take a look at what we immediately notice. You can see that there's tons of support and resistance in this range right here. Okay, so obviously prices never come back down here, but if it were to ever come down here, we can identify immediately just using the Fibonacci retracement tool that $16 and roughly $13 would be support and resistance levels. Okay, now when we come back up here and we look at how this thing sold off, there's a couple things that we can notice right away. Okay, so one of the things you hear people discuss with Fibonacci is where do I start and where do I end a retracement? So in this particular instance, like we discussed, we've identified that this was the lowest low in the start of this trending move, right? And then we also identified that this was the highest high of this trending move, right? So here's tip number two for Fibonacci, okay? When it comes to Fibonacci, what this tool is actually attempting to tell you is the strength of a retracement in a trend. Okay, so we know that this is an uptrend, right? And when this thing started to sell off in 2008, though it looked very bad and price fell quite a significant amount, when we used our Fibonacci tool, what we could immediately identify is that price found support inside of what's called the golden pocket. Okay, now the golden pocket is typically a place where price likes to magnetize itself towards. Okay, now this retracement did not tell you that this stock was becoming bearish, not on the weekly time frame, because when we see this move and a subsequent retrace to the golden pocket but no further, this is telling us that our trend is still very much intact. All right, so when we just identify our trend, you obviously have your lowest low here, okay, and now we have our high here, And then in the sell-off of 2008, we made what's called a higher low, right? So we made a higher low, which is consistent with an uptrend. Okay? So what a lot of traders would do is if they were trading this particular stock, what they would ultimately end up doing is taking a long position at that golden pocket. Okay? And they would say, oh, that's the short one. And what they would say is, I'm willing to risk losing the golden pocket by, let's just say in this particular example, 10%. Okay? So I'm willing to buy the golden pocket and risk about 10%. Okay? And by risking 10%, I'm saying to myself that I believe that the trend is still intact, and I believe that we can bounce not just to the next layer of support and resistance identified by the 0.5 Fibonacci here at $30, but I also think that we can get back to where we once were before. Okay, so any trader that longed the golden pocket in 2008 has never once been underwater since then. Okay, you see all this price action? Never once since that lowest low retracement in 2008 has a trader who purchased that golden pocket ever been underwater on this stock. Okay, so let's write rule number 2 on here. Rule 2. Fibs identify areas and strengths, weakness of retracements. Okay? So everyone's still with me so far? Good. Okay, so now, the next question that you're probably going to have is, how did we identify where to draw our next Fibonacci level? Okay, so what we need to do here is look at this section of price action. Okay, we can see that when price made this low here, the highest high we got before the COVID sell-off down here, the highest high we got was right here, right? So now let's use our rule, and our Fibonacci is only ever drawn from left to right and at wick lows to wick highs. So we identified that this was the lowest low of this particular trending move, and then the highest high was the high here, right? So I'm just gonna connect it all the way across so you guys can see all the layers and all the levels, okay? So now that we've done that, now you can identify clear areas of support and resistance, right? So if I just draw straight lines across from here, right off of the Fibonacci levels, okay? And then I remove our Fibonacci retracement tool. Look at how price action reacted to these levels. All the way across in the stock's history, you can see these layers of support and resistance, right? So what the Fibonacci tool is supposed to do for you is help identify these areas where, even though it looks like a big scary drop, what did the Fibonacci tell you? The Fibonacci, in this particular instance, actually held above a golden pocket, okay? And when we held above any sort of golden pocket, well, all we had to do was look historically, right? And we remember back here, when we drew this Fibonacci, that this layer right here was the golden pocket, right? And you bounced off that golden pocket and you never came back to it again. So if you were a trader and you were trading the trend and you saw price come right back to the same very golden pocket, except on a separate retracement, you would say to yourself, well, the last time we hit the golden pocket on a macro scale, we hit that and we actually bounced, right? And then we continued our trend. And once again, if we look here, price wicked down, right? Came right back up, tested this again as support. You'll hear a fire truck coming by here in a second. It tested support, and after it tested support, it exploded and made new all-time highs. Pause for the fire truck. That's intense. So anyways, if we just look at both times that we hit a golden pocket, okay? So once here, there was 235% to be made, right? And then if we look here again, just from the golden pocket, not the lowest, I'm just going from the golden pocket, another 300% could have potentially been made in basically 2 years, right? So traders use these levels to identify not only areas of support and resistance, and not only to identify how deep these retracements are and whether or not they are healthy retracements, but they can be used historically to identify potential areas of either longing the stock or shorting the stock, right? So that's what we look for when we're using Fibonacci. And so let's just do it again, okay? And again, I'm still on the weekly time frame, right? So let's take it from this ultimate low that we made here, right? And then we're looking for the highest high of this trend, which is right here. So once again, we're going to pull our Fibonacci from the lowest low here, okay, to the highest high. And what do we see? Once again, this green layer right here, okay? Let's quickly look at this real quick. So what I wanted to show you guys, at least on the Fibonacci retracement tool, is if you are using logarithmic scale, you need to open the Fibonacci tool and you need to go down here and you need to click this. Fib levels based on log scale, okay? Once you have that clicked on, it makes a big difference, okay, in terms of what you see. Because once you turn this off, suddenly those areas of support and resistance look a little bit different, right? But when I go back to log scale, now you can identify that this is a completely different, it looks completely different, right? So you have to make sure that if you're on logarithmic scale, you need to adjust the Fibonacci tool settings. And so you just double click, go to the bottom, and here it is right here. Now I've turned on the levels and the prices for you guys. So you can see that this is a 236, this is a 382, this is a 0.5, and this is a golden pocket. Okay? And all these numbers are telling you is it's actually the percentage amount. Okay? So from this low down here to this high, 23.6% of a retracement is what the 236 is. And 50% of this entire move is what the 0.5 Fibonacci is telling you. Okay, that's all these are. These are percentages of how much this stock has moved and how far it retraces. So in this particular instance, the stock retraced basically 23.6% and not much further, while continuing to hold this level of support and pushing off of it. Okay? So now let's try and move into smaller time frames and let's try and adjust how we're using these to trade. Okay, so let's say you're not quite the big macro trader like that, and you like to identify quicker, a little bit of a quicker move, right? So now we're on the daily, and what we're going to do is we're going to draw a fib from the highest high of this particular sequence, the highest high to the lowest low. Okay, so we're once again, pull out the fib tool, the highest high. Okay, now I'm just drawing it way over here so we can connect, actually I'll just draw it and we can connect price action, the entirety of it. Okay. So we've got our highest high to our lowest low, right? And now you can really start to identify these areas, okay? So let's take a look. When we see price action, this was our lowest low. This is where we completed our Fibonacci, okay? We saw price test this as resistance a few separate times before eventually breaking above it and then gapping up into more areas of resistance and support. And you can see that when we gapped above this 382, okay, labeled in gray, when we gapped above this 382, you had used that as support multiple times after gapping above it. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. Eventually you broke below. Then you had an earnings blowout, which actually gapped us above 2 separate areas of resistance, okay? But here's what you can also identify. This golden area right here, this is our golden pocket, right? We can identify that prices come to that golden pocket 3 separate times and failed. Once here, and once here. And all 3 times it failed. But here's the kicker, okay? And why somebody who was trading this likely wouldn't have become bearish at any point. Once you broke above this 236 of this downside move, okay, the 23.6%. Okay, once you broke above that, you never fell below it again. Okay, you broke above it in October, late October of 2022. And even when you came back and tested it in May of 2023, you never, ever, ever broke below that. And then you see, you use it as support, trade it to resistance. Use it as support, trade it to resistance. And then suddenly, when we got this new golden pocket test, you actually broke above the golden pocket for the first time in basically 2.5 years. And you saw the stock really make a significant move up. Okay, now if we just look, golden pocket to the high, there's 10%, an easy 10%. And all you did was you saw price break resistance, turn it into support, and blast off of it. Okay? And what this tool was doing for us was identifying how strong the retracement is. Okay? In this downsized move, how strong was the retracement? Well, here it was fairly strong, but still in line with trend. And here it was fairly strong, but still in line with trend. And here we saw the retracement finally break the magnetized area, and now suddenly this downtrend move does not look as healthy as it once did when it failed here, here, and here. Suddenly, this downtrending move may ultimately be broken because what this golden pocket and what the price action is telling us is that we've broken above the very, very key level of this downtrending move. And now it's telling us that this stock looks to be poised for a breakout. Okay, and what we would be looking for is to be aiming for higher highs, right? So that's all we're really using Fibonacci for, okay, is just to identify one, areas and layers of support and resistance. Two, to identify the strength of retracements, okay? And three, we can essentially identify a trend, right? We can identify a trend using Fibonacci, and that's it, right? Because if we had broken below this 236 and started selling off, what would that tell you? It would essentially confirm that this appears to be a downtrend, right? Because you've got your high, right? And you've got your low, then you've got a lower high, a lower low, an equal high, okay? And then if this had broken through and come somewhere down here, then you would have another lower low, and that would identify a downtrend, right? But because you held the 236 in this Fibonacci retracement, right, we would identify this as holding support and potentially breaking from trend, potentially breaking from this downtrending move. And why would we say that? Because once again, just using simple market dynamics, you've got your high, your low, your lower high, your lower low. Then we made equal highs, and then suddenly you've got a higher low, your first higher low, right? And so if you've got your first higher low, now you're looking for higher highs, and suddenly now you've got a higher high, right? So you've got a low, a high, a higher low, and a higher high. Suddenly, this looks to be making and continuing an uptrend. And all we did to identify that was simply using Fibonacci tools, right? I have not pulled up RSI or MACD or any moving averages. All we are doing is using price action within the Fibonacci and identifying areas of support and resistance and deciding whether or not the trend has been broken. Okay? So that is the easiest and best way to explain Fibonacci for beginners. Now, I will do a follow-up video, Fibonacci for seniors. Okay, and Fibonacci for seniors is going to be a little bit more in-depth in terms of how we identify what each one of these levels is telling us. Okay, because each one of these levels actually tells us something. And not only that, but each one of these levels can actually give you a certain percentage amount of the probability of going up to the next one or down to the one below it. Okay, but I don't want to confuse anyone, so I just wanted to make this as basic as possible. So, as homework, what you guys should do is start drawing fibs all over your charts. Whether it's the daily time frame, the weekly time frame, the hourly time frame, whatever it is. Use Fibonacci to help you identify these areas of support and resistance. Okay? And feel free to leave comments, come join the Discord, at me on Twitter at Jackie Latits. You can reach out to me at any time and ask me questions, whatever. I'm happy to answer for you guys. Okay? So that's what I've got on Fibonacci. Hopefully that was a help for some of the beginners and some of the noobs looking to use Fibonacci and trying to better understand it. So thanks for watching, and Jackie out. Peace out, guys.